Good morning, guys. Good morning. I hope you all very well. This is your humble servants in the house, Dr. Max, and I hope you've been having. I hope you had a great weekend, and you really enjoy the weekend with your family and friends. And so today is what do we have today? Today is Monday. Today is Monday. This is the start of our trading. This is the start of our trading journey, our trading week, and a proper analysis on Monday will really help you to have a great week. And remember, the best things to do is to take your time, be patient, and then everything will be okay. All right. So that's all. Yeah. So we are going to start our daily analysis. And a lot of people ask me to do NQ. Okay, so we're just going to focus on NQ, and, and then and then from NQ we are going to focus on doing the analysis with the Max Maserati model. And first thing first, let's just talk a bit. Let's talk a bit about disclaimer. Let me. I'm going to show the disclaimer page just in case, because you never know. We need to because this is just a matter of pure entertainment or pure. It's my point of view of the market, and remember, trading involves a lot of risk, and you need to accept to lose all your money, and every decision you take, it's your own decision. It's not my decision. Okay. And I'm just talking about my point of view about what I see on the market. This is the disclaimer page, and then I will leave it for a while so you can read it through, and we can start immediately right after with the with our analysis, with our daily analysis. Yeah. Mm. Uh, uh, yeah. So I hope by now. I hope by now you already see the you already read the disclaimer. So let's start right away with our daily analysis. Yeah, start with our daily analysis. Okay, as we can see here, let me share my screen so we can start right away without losing any time. All right, this is my chart. This is my chart. Okay, let's do the analysis on NQ because a lot of people requested me to do the analysis on NQ instead of ES. Okay, so here we go. Okay, as we do, let's go and start back to the year. Okay, let's go back to the year, and then let's just delete this because we don't need this H4 open. We don't need this. And daily target, the market already took this. This is what we did the last. Is the open of 2025. And then there's the close of 2024. Okay, as I was saying last week I was saying that that the market is completely bullish, and then when we saw the market was retracing down here, we were just inside of the open low segment of the expected bullish candle. Okay, we were inside of the segment open low, which is like here, open low, high close. This is the Here's the normal behavior of a bullish candle. If we're expecting a bullish candle, the normal behavior of a bullish candle, it's an open low high close. So when the market was going down, I told you we are in the segment of the open and low. Okay, so don't worry, we are completely bullish in a bullish market. And if we check the 6 months, the 6 months tell us exactly the same. And I say the same thing. And if we go back on the 3 months, exactly the same. We were inside of the open low segment. And if we go to the monthly, and the monthly, so we saw that, okay, even we on the daily, even on the yearly, even on the yearly, on the daily, not yearly, on the yearly, on 6 months, on 3 months, we had a completely bullish market. However, on the daily, we had this bearish affinity plus, which means based on the Max Maserati model, this candle is a bearish affinity plus. If I were to put the Max Maserati model here, you see we have a bearish affinity plus, which means this candle, the Max Maserati model candle bias is telling us that the next candle will take this low. This is exactly what happened. We saw that the market come down and took this low, and then inside of what? Unfair pricing gap. And the third candle that formed this unfair pricing gap, what was? It was a close in it was a bearish affinity plus candle, which means it wasn't body close. So which means this candle of the year had all the rights to come back and retrace inside of the unfair pricing gap, which it completely failed. Okay, this is on the monthly. Okay, so this is our 2025 target. This is where we expect price to go. Okay, after price arrive here, we don't know if price will continue keep moving up higher or if price will reverse from this area. However, this is what we are seeing. This is what we expect for this year. Okay, if you see the 22 weeks, 52 weeks. Okay, so the market wipe out the previous 52 weeks. The previous 52 weeks. Let me just check this out. No, I just wipe out the previous 52 weeks profits. Okay, so a lot of people who were bullish, completely bullish, they took profit this year at the beginning of the year. What wipe out the 52-week profit, and then if we check on the weekly, a bullish affinity plus as expected. Okay, as expected. I remember I say we had a MMM, we had an MMM block here. Here, we have an MMM block CDL. Let me just put this this candle bias on 12 hours. You can just put it on the chart. Okay, so you can see it clearly. Okay, let's put it on the chart. Let's put it on the daily, so we know exactly where is our target. Okay, we can have it on the weekly. Let's have this on the weekly. So this is our weekly target. We know this is our weekly target. Okay, so so basically, as you can see here, as I was saying last week, that we expect this market to close. Okay, we expected this market to close bullish affinity plus. Okay, expected this market to close bullish affinity plus. This is exactly what happened. You have a market that closed bullish affinity for a candle strength going up. Okay, strength going up, and then so we expect the market to come and take this liquidity here. So this is our weekly target. Okay, this is our weekly target. Okay, and then we expect the market to do what? To respect this area. And as we can see, overall market is bullish. We have a bullish break here, the first bullish break here, bullish break, bullish one, break of structure, bullish two, break of structure. So we expect the market to create a third bullish break here. Okay, to continue with the bullish bias. Okay, now on the daily, what do we have on the daily? On the daily, what do we have? As we can see, As we can see on the daily, we have a let me just take this out for now. Okay, on the daily, what do we have? This is our weekly target. This is our daily candle on the daily. When we check the daily, the weekly close bullish affinity plus, and the daily close what? Bullish body close. So we see that the alignment of the weekly with the daily. Okay, the weekly and the daily are aligned. Okay, so we have aligned time frame. So we expect the market to do what? To take this high. So this is our daily and weekly target. Okay. So this is our daily target as well. Daily/weekly target. Okay. However, we can mark out this level here. Okay. We can mark out this level, which is we have some sellers here. And what else? We have sellers here as well. Good morning, Robinson. How are you doing? And then we have sellers here. And then, so this is maybe this week the market might come all the way here and take all these sellers out. Okay. And then we have on-field portion here, this area. Okay. They're going to mark out the on-field portion. And we have on-field portion here. On-field portion is a portion of price where the market didn't completely fill out the unfair pricing gap, which means the market highly likely come back to this level. This on the daily. Okay, on the daily. So we are looking at bullish prices. Okay, and then we have a kind of volume imbalance here. Nice volume imbalance here, which means price highly likely come to this level as well and fill this. So we have a double confluence at this level here. Okay, we have a double confluence. We have a double confluence. Okay, we have double confluence here. So this is a volume imbalance here. VI on the daily. Okay, VI on the daily. And then we expect the market to do what? To come and take the daily high. Maybe if the bulls are very strong, they will keep pushing higher, take this high, and then we need to check if where is our HVC. So now we have a nice HVC. We have a nice HVC indicator that I just published here. This indicator. Let me just put this a bit down. You can check the HVC here. So which candle is our HVC here? 54%. Okay, from this swing low to this swing low, so this is our HVC. Okay, we can say this is our HVC bullish here. It's like 54%. Yeah, this is our HVC swing high. Okay, this is our HVC bullish on this swing. Bullish HVC bullish. I just published this indicator, bullish HVC bullish. Okay, and then this HVC bearish here from here to here, this swing high to this swing low, HVC bearish. Okay, these are 56%, and this 56%. So these are HVC as well. Okay, sellers on the daily, these are HVC bearish. HVC bearish. So if price so price needs to close above this level here to confirm the move. Okay, we would love to see a bearish body close on top of this high here to confirm that price will keep pushing higher. Okay, so we finish with the HVC candle. So we can let's check, and then let's double click. And so what's at what we can see. And so price, now we expect price to keep pushing up to get the liquidity today. Maybe today might take this one as well, but anyway, what we don't know about this, our main target for this weekend and today is this daily. and weekly target. These are main target. Okay, so these are in daily. This daily as well, and this daily as well. All right, this daily, and then and then we expect price to keep pushing up. Okay, but the best thing is like if we price could close bullish body close above this level here, 21,892.00, it will really confirm that this price is crazily bullish. Good morning, Jackson. How are you doing? And then let's check for what we have on the MVM. Let's check what we have. Okay, as we can see, we are inside of a external block CDS on the daily, so which means price need to cross it with a lot of power. I think price already crossed this level on ES, if I'm not mistaken. Yeah, price already in not cross, but already touch it. Okay, price already touched it. I think price even closed. Yeah, price closed. Price even violated the midline. Okay, price even violated the midline on ES. Okay, and it's the same, pretty much the same thing on ES. Okay, but in Q, price hasn't really violated this MMM external block CDS. So we expect price to at least close above of this HVC to confirm the bullishness, or close above this side to confirm the bullishness. Yeah. And yeah, what's next? I think that's all. And for the 16 hours, see, we have another target here, which means probably likely come here. We have another sellers level here. You need to mark them out, because this, whenever price touch a high or a low of a candle, you will have a reaction. So this is the best area for you to take your take profit. Okay, because big banks will do the same, so you need to do the same as well, because this is the target area. And then and we have external block here. We know as already that we have an external block here. Price already fill out this unfair pricing gap. Then price unfair pricing gap here, but already 8 hours, pretty much the same. And we have a huge unfair pricing gap here. That since it's the beginning of the week, we never know, price might even come down to this unfair pricing gap, which I really doubt, but we never know. Let's mark everything out. Okay, so we don't have anything leave unmarked. Okay, so as I was saying, price always come and make a kind of reaction to any high or low. So for example, we had a seller's level here on 6 hours, so price came to it and react. Every single level, every single high or low, price will react to them. It's either quash them with strength and power, or close below it. So now we are checking the seller's level. Will the market close below this high or not? Okay. And then we have our settlement price here, which is 21,594. Yeah. And then 6 hours, what do we have? 6 hours, we are pretty much the same. This seller's level is on 8 hours and 6 hours as well. Slash, we can put 6 in off. And then 4 hour, we don't have much change. And on the 4 hour, we have unfair pricing gap here as well, which means the bulls are very strong. And then let's mark this out as well. And then the 4 hour, what do we have? We have a CDL that was created at this level. Okay, so this internal block CDL, okay, I will say this internal block CDL, internal block of internal MMM external block log with CDL created here, which means you need to cross above this line with strength and power. In the 2 hours, what do we have? Pretty much the same. It's pretty much the same. This is our next target. This is our next target on the 2 hours. Okay, 2 hours next target. Your seller's level here is our next target. So if price were to go higher, this will be our first target. Sellers. H2. Okay, and then 1 hour, what do we have? Okay, basically we are inside of an external block. That's why price is taking its time around this level. However, we have a lot of liquidity, which pretty much telling us that price highly likely come to this level. So this is an equal high sellers slash equal highs on H1. H1, H2. H1 slash H2, yeah. And then we have another liquidity level here. I have another sellers level here. Okay, which means price highly likely come back to this level here and to take this liquidity. This is what we are looking at this morning. And then sellers level here, and we have a external block here on H1. Okay, so this is a very high level that price needs to pass by with strength and power. Okay, so you can just write this external block in the 1 hour. It's just to have it in the lower time frame to know where do we have our external block CDS here. Okay, and then this is 1 hour H1. Okay, so yeah, basically this is it. Okay, and 15 minutes. 15 minutes, it's not really aligned yet. Now we have a very body close. So anyway, we expect price to come down up and take this liquidity level. But so far, the 15 minutes is not quite convincing. As you can see, we have no bullish body close. Okay, no bullish body close that can really show strength. However, the previous candle strength was bullish with up direction, and so this is a very good thing. Okay, and then what else? And then we have a market is already in premium, so there's no trade here. Market is in premium, and market not only the market is in premium, but the market is not really giving any bullish body close in this area here for you to take a trade bullish. So at least I expect the market to retrace a little bit and then push up again, but let's see. But because we have no bullish body close in the 15 minutes, so there's nothing. So at least we expect this 4 hour to close. If it's closed above this line or below it, and then we will really know what we can expect from price today. Yeah, so let me just put this side right, let me put it left. And so you can see, so we expect price to at least close above this level. So this is 4 hours as well. This is in H4, H6, H8. So at least we expect price to close above this level to really guarantee that price might keep pushing up. Okay. And what else do we have? Yeah, and there's a lot of things I don't really need in this. Just guys, let me just see special. Frame not really needed. Symbols not really needed. This is what we really need. So we can put this up, no, left, right, up. Good. This is the most important things that we really need. Yeah. So yeah, and then so let's see the candle strength. So previous candle strength was bullish 72%, which means the bulls they were expecting price to take this high, which happened. And then so here we can see as well like the current candle strength. So we don't really need this. And this is the best confirmation you have that price will not go down. Okay, this is 86. Okay, and I will take a time to explain all this indicator that I recently published. And then you have the same thing inside of the MMTD pool as well, like for the current candle strength, CC current candle strength, and previous candle strength. Like you have like 3 candle strength you can see, and so which allow you to really understand what the market is doing. So, and basically you don't really need this if you have it here already, but you'll be missing out, for example, like this big number to put this sign plus going off direction, or maybe I should code the direction of this inside of here as well so we can see them. And and the best thing with this indicator is like you look when the market is like at least 60%, a candle with 60%, okay, and you wait for a retracement and get in to take a nice trade. Then let's go on the 5 minutes. So see, yeah, 5 minutes. Okay, the market, we just see the market is like struggling. So we see there's a bunch of liquidity here. The market highly likely go down and take. Yeah, and I think pretty much that's all for today. Yeah, if you have any questions, you can ask your questions. Yeah, and I would gladly respond to your questions. Yeah. Yeah, I think that's all for today. So do you have any questions, guys? I'm reading the questions now. If you have any questions, this is the moment to ask your questions. And if you don't have, and I think that's all for today. It was a pleasure to be here with you. Bye-bye. Please take care.